Saturday, April 15th, 2017, Monaco 64, home of alternative economics and contrarian views. I like to talk about the shenanigans going on amongst the bullion banks in London and the LBMA, which is the London Bullion Market Association. And I'll give you a little bit of a background on the LBMA. I'm on their website, and that's what they say about themselves. LBMA, the competent authority for the world bullion market. And it goes on to say, the LBMA is an international trade association representing the London market for gold and silver bullion, which has a global client base. This includes the majority of the gold holding central banks, private sector investors, mining companies, producers, refiners, and fabricators. It goes on to say, the ongoing work of the association covers a number of areas, among them refining standards, trading documentation, and the development of good trading practices. This couldn't be further from the truth. The competent authority. Well, why am I saying that? Well, because there was a London PM fix from the LBMA earlier this week on the 11th of April, on Tuesday, which I will talk about later, and you'll see how amazing that was. But first of all, I'd like to talk about why it's so important that these fixes that they have, AM or PM, and a lot of people say, oh, fix, they're fixing the price, they're manipulating, but actually it does serve a purpose to basically, see where the price is at particular times, because they're used to fulfill contracts between, central banks, private sector investors, mining companies, producers, refiners, fabricators, traders, especially, on the derivative side. These bullion banks, they write a lot of OTC derivatives, and a lot of them are very exotic, and they're very specific in terms of the price and time. They use the PM fix, AM fix. First of all, just want to let you know who these bullion banks are. And I got this from the LBMA website, and it says, who are the LBMA market makers? And it goes on to say, of the 13 LBMA market makers, 5 are full market makers and 8 market makers. The 5 full market makers quoting prices in all 3 products. So the full market makers are Citibank, Goldman Sachs International, HSBC, JP Morgan, Chase Bank, and UBS AG. So you can see that Barclays is not involved in the LBMA anymore. And I'll come to that later. You probably realize why. They used to be. And then there are 8 LBMA market makers who provide two-way pricing in either 1 or 2 products. And they are Bank of Nova Scotia, Scotia Mocatta, BNP Paribas, ICBC Standard Bank, Merrill Lynch International, Morgan Stanley and Co. International, Societe Generale, Standard Chartered Bank, and Toronto Dominion Bank. So these are the bullion banks. There are not many of them, the market makers. There are not many, easy to investigate if there's shenanigans going on in that association or exchange. So now I'm going to go to a story from The Guardian, and it's from about 3 years ago, and it says Barclays fined 26 million for gold fix failings. So what happened here was that the Barclays trader, he'd written a digital exotic option to counterparty, to one of their clients, and it said that on such a day, I think it was 28th of June 2012, if the London PM fix is at 1558.96 or above, we'll have to pay you $4 million. And basically, the day before, the gold price was right near that 1558, and the trader from Barclays, got his colleagues to basically dumped the price down to keep it below that 1558.96 level, which they did, and they avoided paying, £4 million to their clients. So they were found out, and Barclays was fined 26 million pounds. And as you saw earlier, they're not part of the LBMA anymore, not surprisingly. So what's going on now with the LBMA? Well, there's a story on Silver Doctors here that I was reading earlier today, and it says London gold fix breakdown, signal for a gold mega move, ? And they note as well that last year the silver fix was 50 cents below where the market was trading, where the spot price and the futures was trading, which is very unusual. And this week, there was another equivalent event for gold, not for silver. And it was on the 11th of April, on Tuesday. And I got the chart here. It's a very short-term chart, like a minute chart for the whole week, which was an abbreviated week, of course. Monday, Tuesday, Wednesday, Thursday. Friday is Good Friday. Markets didn't trade. And you can see here on the 10th of April, the London PM fix. And the reason why I say from 1500 hours or 3 p.m. is that it might take a minute or 2 or 5 or 10 minutes to get the fix. And they start from 1500 hours. I'm not sure exactly what time they fixed it. They don't have the information on their website. But anyway, the Monday fix, April 10th, was 1250.05. And as you can see there, gold was trading around 1250. So nothing, out of the ordinary. But then on the next day, Tuesday, April 11th, the London PM fix from 1500 was 1252.90. While spot gold was trading around 1265, as you can see there by the chart, right in the middle between 1260 and 1270. And I've made a little note there with an arrow pointing down towards the bottom of the screen. It says roughly 1252.90. They fixed it completely where the market wasn't. And why do they do that? Gold was trading 1265 or more, and they fixed it at a price which had no basis in reality at 1252.90. The only thing I can think of is that one of the bullion banks had written a contract with a hedge fund or traders or a bank or a mutual fund. They had written a contract, could have been an options contract, saying, if gold was trading at 1265 or more, we'd pay you such and such amount of money. As a digital option. These options, they're not like the normal option where you exercise them and then you sell the underlying. This is like very specific. Let's say the option was if gold was trading at 1265 on the 11th of April PM fix or better than 1265, we'll pay you $20 million. It could have been that. And but we don't know. But it's very easy for the regulators in London to find out. There's not too many bullion banks, as you saw there, and market makers. The other thing it does, it completely discredits the London bullion market. This is the kind of stuff that happens. Well, I don't even know if it happens in third world countries, where they basically make things up and rob, the refiners, the producers, the jewelers, people who were, I was in the pawnbroking business for a couple of years. I opened a franchise, and I used to do scrap, gold scrap and silver scrap. And we used to use the AM or PM fix. When I sent the gold that I bought as scrap to the refiner, he would come and say, "Oh, you're gonna get so much because we fixed it with the price at 3 o'clock London." But can you imagine now? You sent off, quite a bit of scrap, and you're expecting to get 12.65 for it, and then then the refiner comes to you. You're getting 12.50 because I got to take, the 2.90 for me. And I say, well, but gold was trading 12.65, and said, well, I'm sorry, the LBMA PM fix was 12.52.90. There's nothing you can do about it. You multiply that by, thousands of producers, refiners, gold mining companies. They should be really angry about this. But the main thing is that the London bullion market, which is controlled basically by the Bank of England, a lot of the bullion banks, they use Bank of England gold to, the gold that Bank of England holds for other central banks. They have accounts with the Bank of England, and they use that gold to, cover their positions in the LBMA. And I'm sure the Federal Reserve and, the U.S. banks, they're involved in this. This just shows to me that they didn't even try to, get the... They try to probably smack the futures, the COMEX, and they couldn't even do that. They couldn't even keep it below, let's say, 1260 or 1265. So they just made up this bogus fix of 1252.90. The other thing I like to note, all the other days, the fixes were pretty much where the market was. So there were no kind of shenanigans. But notice on Thursday, though, like just before the fix at 1284.15, gold was actually trading on the highs there, 1288, 1280, and then you can see just before the fix, there's a sharp drop there from 1288. I wonder if that was another shenanigans by the bullion banks because they didn't want to fix it, above 1285. So they fix it at 1284.15. So yeah. Personally, I don't think the Bank of England, the FCA, or the LBMA are going to look into this, but that's their own bad. I think this is really bad for London. London has been a financial center, important financial center, if not, it's the most important foreign exchange market in the world. And but the way things are happening now, with also the story earlier in the previous week about the BBC Panorama program having tapes implicating the Bank of England in the LIBOR rigging situation. The Bank of England, the City of London, quickly losing credibility here, and that's not a good thing. People need to trust, the banks and the financial system in London, or because it's one of the most important industries, if you want to call it that, in the UK. And if the world, is losing confidence in the ability to trust London as a financial center, it cannot be any good going forward. I mean, the Bank of England, the LBMA, the FCA, they need to crack down on this, or else, there will be no LBMA, and the physical gold trading, bullion trading, is going to go elsewhere, probably, to Asia, somewhere in, Shanghai or Moscow. I don't know. So if you enjoyed this video, give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to the channel, there's some links below in the description, and I'll talk to you later. Bye.